Hey, how's it going, friends? So in today's video, I'm gonna share with you something short, sweet, simple, get straight to the point. How not to 100% finance your deals. So I'm JP, Juan Pablo, owner and founder of Multifamily Done For You, formerly known as 100% Finance. You might be thinking, why the name change? Because we wanted to get very focused and zero in on our core competency, which is multifamily deals. Okay. However, in today's video, I'm going to share with you, get up close and personal, about 100% finance, because some people do it wrong. And so what is 100% financing? It's pretty much acquiring an asset, let's say in this case multifamily, in which you have little to none of your own money in the deal. You finance this bad boy 100%, right? So you might have heard of business credit cards, you might have heard of getting a private lender who could fund the down payment, the soft costs, the closing costs. You might structure a deal with the seller, do seller financing 100%. All those things are great. So I'm just going to share with you, short and sweet, the one thing that you should never, ever, ever do, which is this. Do not get any debt to finance the down payment, soft costs or closing costs. Soft costs are costs you incur before you close, like property inspections, appraisal, stuff like that. Pretty much don't get debt that's tied to your personal. Because I heard people before will say, especially if it's revolving debt, like a credit card or a line of credit, personal line of credit, personal credit card, even personal term loans. So when you do those things and it shows up on your credit report, that's going to raise a red flag with the lender, okay? And that can be detrimental because when you leverage your personal credit and you get, let's say, a revolving line of credit or a personal credit card on your personal credit, and you max that out, right? So that way you can tap into it to use as a down payment. Maxing it out increases your debt utilization ratio. It has a negative impact on your debt to income ratio, which has a negative impact on you qualifying for a mortgage. So you don't want to do that. And I learned that through experience, right? I bought this is before I, really knew real estate, just taking action. I bought a single family property and it was distressed. I paid $10,000 for it, and it needed about $30,000 of work. So it was around 40,000 or less, and I think it was appraised for high 70s, 75, 77,000, something like that. And I went to try to refinance, and I couldn't. Why? Because I used personal credit cards to finance the purchases. So that's back when I didn't know about hard money loans. I didn't know about business lines of credit, business credit cards, none of that. And so I got the property fixed up and pretty, the appraised value was there, but I was jammed up with the refinance, because I bought it cash, by the way, 10,000, of course, that's cash. So I got jammed up with the refinance simply because my personal debt to credit ratio was well above 30%, and you want to keep it below 30%. All right. So if that's you, if you're looking to finance deals 100%, err with a side of caution. Make sure you do it strategically, because I always say, like, using debt is like a surgeon, right? You got to use it with precision, with skill. But if you use a knife haphazardly, right, it can kill the deal. And that often happens with debt. People get their hands on debt, not caring where it came from or what's the minimum payment. Does it cash flow? Does it show up on my personal credit? They just use it haphazardly to the point it kills their deal. It kills their cash flow. All right, so if you're interested in getting cash flow, multifamily investing, schedule a discovery call below so my team can connect with you. We can see if we're a good fit for you, you're a good fit for us, and we can make the multifamily magic happen. But hey, you don't have to do anything I share in this video. All I'll say is this: just keep coming back via your content to the point you're informed and take action. As always, guys, this is to your success. Continue to earn passively and live passionately. Peace.